If you think rising oil prices only mean paying more at the gas station, think again. What we are seeing now isn't just another energy story, it's a spark. A spark that could reignite global inflation and reshape financial markets for months to come. In 2022, oil shocked the world once. In 2025, it may be happening again. Crude oil prices are climbing fast, with Brent crude approaching triple digits again. This surge didn't happen by accident. It's a perfect storm of three forces. First, OPEC Plus signaling supply cuts. Second, renewed geopolitical tensions in the Middle East. And third, US crude inventories shrinking faster than expected. Energy is the bloodstream of the global economy. When oil moves sharply, every other part of the system starts to shift. The market has already started to react. Global bond yields are climbing as traders price in a return of inflation pressure. Energy stocks are surging, but growth and tech stocks are starting to feel the heat. Investors are repositioning fast. For central banks like the Fed and the ECB, this is a nightmare scenario. They spent 2 years fighting inflation. Now, oil is pushing inflation expectations higher again, and faster than policy can adjust. The USD/OIR has strengthened as investors flee to safety, and emerging market currencies are under heavy pressure. Oil isn't just a commodity, it's the heartbeat of global liquidity. Rising oil prices don't stop at the trading floor. In Europe and Asia, energy-dependent economies face mounting import bills. That means higher transportation costs, higher food prices, and higher utility bills for millions of households. Inflation expectations are already creeping up in bond markets. A new wave of cost-push inflation could force central banks to either raise rates again or keep them higher for longer. This isn't just a market story. It's a political and economic chain reaction. Energy shocks have started recessions before, and they can do it again. Let's look at the numbers. Brent crude has climbed nearly 25% in the last 2 months. Gasoline futures are trending higher in both the US and Europe. And inflation swaps, the market's measure of future inflation, have started to spike. These are not random moves. These are early warning signals. History tells us, when oil spikes, inflation follows. And when inflation rises, central banks react. What we are witnessing now could define the next 6 months of monetary policy and global capital flows. The next inflation wave may not be triggered by a policy mistake, but by a barrel of oil. This is Global Pulse 360 Live. Don't wait for the headlines. Be ahead of them. Subscribe and stay with us, because the next global story has already begun.